The Financial Survival Network, helping you to survive and thrive in the new economy. Get your free financial survival toolkit and find out where to buy gold and silver safely at great prices. Sign up at financialsurvivalnetwork.com. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold since 1990, and I'm a customer because when you buy, they ship. To find out more, go to milesfranklin.com or call them at 800-822-8080 and get a free quote. You know, there's an old adage, if you're looking for who's responsible for your awful investment results, the best place to look is in the mirror. And more on that with Peter Grandich, our old friend. Hey, Peter, how you been?
Hey, good to be back. Thank you for having me.
And it's always great to have you. And you're still getting nasty emails, huh?
Well, it always comes with the territory. When you deal in a business where failure is the norm, you may recognize that, but others don't. And we're just a society that tries to always seek blame anywhere else but ourselves. I blame my too many pounds on my wife's good cooking versus the fact that I eat too much. But so we all look to put the blame elsewhere. So it just comes with part of the territory.
I don't know. I blame my weight on the fact that I'm a pig and I love to eat. You know, it's
well,
really that simple.
That, but that's my case too.
But I'll tell you, you know, really, in the end, whether you make your own investment decisions yourself or you hand them off to somebody else, you're responsible because you made the decision to either trust that person or trust yourself. So the fact that people need somebody to blame, to me, is really an awful flaw in human nature that we're programmed to not take responsibility for our actions. Do you find that disturbing?
Yeah, but it's also crazy if you think about this, how many times we listen to the weather and get mad that we didn't get the accurate report, but tomorrow we turn on the same channel, if not another weatherman. But it's just a way of life. I mean, I don't want to say I've grown totally used to it because sometimes people reach new lows in their comments. But for every new low that's reached, there's still some very, very good people that appreciate, understand what you're trying to do and show their gratitude in kind words. So, you know, you gotta look at the cup half full versus half empty.
Oh, I totally agree with you. Actually, the cup is always completely full. Sometimes some people look at it, it's half full with water or wine, but the other half it's filled with air. So it's always totally full in my book. You know, it's just so interesting because I look at these miners and obviously, or you've forgotten more about it than I'll ever know. But I look at these screaming values and you see this outfit La Mancha. I don't know if you picked that one up. It was an Egyptian billionaire just bought the company for $500 million, effectively bought the gold in the ground, established reserves, $50 an ounce. When you see that kind of value, you just know that over time, the market has to correct itself. And you've got these Ben Graham nets popping up all over the place. And this is a value play if I've ever seen one.
There's the greatest disconnect in almost the 30 years I've been around this between the underlying price of the product, in this case, the ore, and what people are pricing companies that explore, develop, or actually have reserves and are producing it. Now, there's a lot of reasons for that. Some are legit, the high cost of operating, the more difficult social, political, and economic environments there are and all. But even after you take that all in, and as you go down the food chain to more of the higher risk explorer types, there's just been almost in a sense a throw in the towel, as if these things won't exist, and if they do exist, they'll never really attract any value, because even though what they're looking for could eventually be sold for $1,650 an ounce, it doesn't matter. So we're only going to put a market cap of $3 million on them when they used to sell something like this for $30 or $300 million. It's really, I scratch my head, because even after you do some legitimate analogy and you try to take the worst case scenario, it's still hard to justify where some of these things have been driven down to, but they are there. And that's the great difficulty. And I don't think even if we get a rise in the metals, it would have to be spectacular that these things can rebound to previous levels every time soon. But I think from a contrarian standpoint, never has it been more interesting to look at these things. So you really just have to believe that this is just another cycle.
Right. It's just another cycle. Yeah.
And if it is,
it's just another cycle. I don't know if the end of the world is coming or not. You don't know if it's coming. But if it's not, then pretty much things are going to be more like today than they ever were before, which means that is a roundabout way of saying that the market goes on, nothing changes. It's just a bunch of cycles, right?
Well, yes, if you think about it, wasn't too long ago when we were facing the 2008 disaster worldwide, and the juniors were just, hammered and hammered. And then 3 years later, many of them saw, 3 to 4 times or 100 times to some extent, but 3 to 4 times, sometimes 5 or 10 times the increase in price. So that's what we that are left in this market have to hold on to, that it's another cycle. It was very vicious. This one came out of left field. It didn't have the normal preload stuff that you start to see before there's a decline. So that's what you just have to look for.
So stay the course, and the only thing you have to fear is fear itself. And that is the biggie for investor psychology, because you get scared and then you go do something emotional, and invariably that is always the wrong decision.
It is, and no matter how seasoned we are, we all get that way. It's been that way for me at times, and it's a great battle.
Yeah, you say it's a great battle, huh?
Everybody's hammering on your head, and you feel like if you just throw the towel and you can move away from it. I suspect, though, Kerry, that unless we do have a significant rally, as we get closer to year-end, people will use the year-end view as a way of just jettisoning their aggravation. So we might have a harder than normal tax loss selling period just for people to get what they think is their mental capacities back again. So even if we do have another bad 5 months, it only will then serve to make 2013 easier to rise again with those type of heavy resistance people out of the market.
That sounds like the way it's probably going to happen, but again, we never know. The future is always uncertain, as it were. I mean, but you do see stocks out there with dividends and with real cash flow and real earnings, and they're trading at these pitiful levels. It's just
there are multiple of companies that net asset value is multiple times its current market cap, and their projects are very advanced stage. So one of the things I think we'll see here, but I think the majors realize that time is right on their side right now, that we're going to see a lot of these projects, and for lack of a better word, sucked up, because they'll be buying them on 10 or 20 or 30 cents on the dollar. So, financing is really dried up. It's very difficult. In fact, if you talk to some of the more innovative finances out there, royalty trust
companies,
they're just knocking down their doors trying to get money. So that's going to be the big difficulty in the remaining part of 2012, is for financing to advance projects. And so that's why I still say that unless we have a dramatic rally in the metals, we're going to continue to have an L recovery in the juniors. We pretty much hit bottom. I don't see the indexes, them all taking much more of a loss here, unless there's for some reason a reversal in the gold price down. But I don't see a big V-type recovery in the juniors until we get into next year.
Yeah, unless there's some rapid run-up in the price of gold, then all bets are off, right?
Yeah, and there we need, as we speak, we've come off the bottom of the trading range. We've moved towards the upper end. We've been in this 1520 to 1640 trading range. We need to get two closes above 1650. I will tell you, if we get that, I'm certainly going to increase my optimism. But we've been up to these levels before, only to see the bears attack the gold price again. And I don't think they're going to go down without a fight again this time. But one of the things that may be aiding us here is not only the overwhelming bearishness that we saw, things like the Hope Digest were at multi-decade lows in terms of gold timers being bullish, but we also saw literally almost a 96% bullish reading out of people on the U.S. dollar, which only gave the 4% bulls to the euro. And we kind of seen a reversal in the euro. Now, I'm not saying the worst is over and Europe is going to be happy times again, but if the euro can get over 125 basis the U.S. dollar, we could see a massive short covering rally, and that could be the momentum we need to see the gold market get above key resistance. So as we go into next week, I think one of the things gold bulls want to watch is the trading of the euro, and if we can get above 125, we can see a dramatic short covering rally there, and I think it can cause the bears in the gold market to cover their shorts as well.
Well, that'll be interesting to see because the euro has certainly had a pretty impressive two-day rally here. It's currently trading at 1.236, up from under 122. It hit 121, I think.
And we're all looking for it to break 120, and it didn't. That caused some short covering, but I think we can see an acceleration in that short covering if we start to trade above 125.
Yeah, and it could just be a dead cat bounce, but that doesn't matter. If it carries on for a few days, that'll trigger a lot of covering for certain. So Peter, we want to find those stocks that are trading for less their net asset value. We can find them on your site?
Well, my site is primarily, I work for many of these junior companies on the corporate development site. There's a clear bias and prejudice, but, you could almost take a newspaper listing of juniors and throw a dot at them and have a chance. I mean, that's how so many of them have been priced. So I think, with a little bit of hard work here and, doing a little bit of due diligence to make sure the company has, enough fuel left in the tank that they don't have to go out and pay a lot of money for gas, meaning do a highly dilutive financing. I think if one is in a cash position.
Yeah. So if you're in the cash position, then you're pretty good, huh?
Yeah. And, it's too late to sell in the cycle other than to relieve what you think is the mental stress, because I don't think there's much more left to them to the downside. We'd be talking about, basically a feeling that the last one out turned the lights out. And I don't think that's the case. I just think it's another vicious cycle. And, we're either side of 180 degree from that optimistic cycle that we had a couple of years ago. So if you haven't been out by now, it's just too late to get out.
I agree with you on that. On that note, Peter, we will talk to you again soon. Hopefully the next time we talk to you, gold will be a couple $100 higher than it is at the present time. And Grandich.com to get the Grandich report free, to hear this interview as well as many others we've done with Peter over the past year, financialsurvivalnetwork.com. Peter, we'll talk to you soon.
Thank you.
Thank you.